Felix and Winston here, and we're live for this pre-market session. I want to make sure that you understand the two most important things for today and probably for the rest of the year. Number one, we just got jobs data in, which was massively disappointing. I mean, a huge miss. And that's important for interest rates and therefore what stocks you might want to buy. And then secondly, you can see Winston's very excited about this part. I literally have the list of stocks that probably most important bank on Wall Street is recommending their customers buy and are buying. And normally they don't give that away, but I've got the list. I'm going to share it with you in full because I kind of think that we deserve the same information as Wall Street. If you agree with that, put an A for agree in the chat. If you think that we deserve the same level of information as the buggers on Wall Street, put an A in the chat. And I'll try to unearth some more of those kind of nuggets for you. And I'll walk you through it and really explain like what it means, but also, as I say, give you the full list. Nothing held back here. Winston is obviously the one who sniffed that out. He has a very large nose. I think Albert back there seemed to have helped too. There was a cat in the plant pot, which is never a good idea. Lots of A's here. Brilliant, guys. So let's jump straight into it. I'm going to share my screen here with you. And this is... So there is two types of jobs data. There is the jobs data that the government makes up, publishes. And then secondly, there is the data that ADP puts out. And ADP is a private company. It's actually a pretty good business if you want to have a look at their stock. And what do you see? Well, you see that this is now. So we've just lost minus 33,000 jobs. And if my drawing skills are a bit pathetic today, it is because one of the cats stole my pen. So I have still a pen pad, but no more pen. So far, it has not rematerialized. I blame Albert. Winston wouldn't do that sort of thing, you see. He's much better than that. But cats will do that for you. And so what does that therefore mean? Well, it's a big freaking deal. It means the economy is actually really starting to slow down. Or is it? Well, most of the jobs were lost where business sort of services. And my suspicion is that that might well be the beginning of an AI-related massive job cull, because you talk to listen to a lot of the big companies, you sort of CRM type people, Salesforce and something, and they're basically all telling you, yeah, like 30% of the work now gets done by AI. So you might need 30% less people, right? Which is pretty important. Beach bum there. I saw that comment there. Very funny. Hopefully not true. So what does it mean? Well, we have less jobs. Wage growth is still pretty flat. So you got to ask yourself, why the heck is the Fed not cutting rates? Because they think there's going to be this tariff shock. Well, it would seem that the tariff bad news is also going to be pushed forward further down the road, because that July 9 deadline is undoubtedly going to get extended, I think. I don't think there'll be that cliff. Why do they have the deadline delayed the first time around if they're going to do it now? So I think the market's a little bit itchy on that one, and I show you just how itchy. This is the pre-market. So Tesla is jumping up 6.8%, probably because he said that, what did he say? He said that Trump has actually ended some wars and sort of credit where credit is due. And therefore, we're thinking that they're going to be friends for the next 3.5 minutes. But big tech is still selling off a little bit here. You can see that Amazon, Broadcom, Meta, Microsoft, Nvidia selling off. Still money pouring into Apple. I guess people are just like, Apple must be safe. I'm not sure about that one, but it still is. United Health is still crashing. We have a look at some of those in a moment. And of course, I'll also answer your questions if you like. But really, the key question is from this. Well, we're going to see a sector rotation. I've been talking about this for months. And you need to understand like what sector to move into. Otherwise, just holding on to the top stocks isn't really going to help you, because very small number of stocks will really benefit from what's about to happen. So it is important to understand that. And for that very reason, I'm going to run a live seminar for some of you guys, probably about 2,000 of you guys, judging by early interest, at 10 a.m. on Saturday, New York time. And if you want to sign up for that, there's a link down below, felixprehn.com/seminar. You can even scan the barcode at the bottom of the screen. You're getting fancy here, aren't we? With technology. There it is, felixprehn.com/seminar. It's also pinned to the top of the live chat now. And what would I teach you? how I make money and how I find breakout stocks on Sundays. I only trade on Sundays. I don't know if you could hear Albert back there, but he seems to disagree with that statement. Now, this is the sort of stuff that Wall Street puts out for institutions. And you will rightly be confused by this because it looks very, very confusing. But what they're basically showing is how are sectors rotating? How are themes that they're investing in changing? And they keep doing that week by week. They change where their money sits because they're following the market. They're following the big money. They're following the momentum, much like Albert is following Winston here, apparently. And in my humble opinion, this is the easiest and the smartest way to make money. Why? Because we don't have to be right on some sort of pie in the sky stock pick that they're going to develop, something to cure cancer. We just follow the money. And if I show you the next chart here, I'll show you what sectors they're actually in. And obviously, they're quite a lot in IT, consumer discretionary, healthcare, financials, and then they show you how that's changing. And it still looks very, very confusing. But basically, you see the blue bars here that are green in my glasses. These blue bars is where they are mostly invested. Software, we've been long software. Aerospace and defense, we've been long aerospace and defense since before the war. Consumer finance, we're long on that. Biotech, we've been long on that, although we're getting a little iffy on it. Oil and gas, we're making money on that. So why am I in the same stocks as Goldman Sachs, one of the smartest, best, biggest investment banks out there? Not because I have a friend there, not because I know what they're doing. It's just because ultimately we all follow the same rule book. And the problem is that retail, like you and me, and that used to be me, we don't have the rule book, right? So we don't know what sector to be in unless someone teaches us the rules. So come and join me on Saturday and I'll do that for you. And it'll take probably an hour and a half or so. But what they're basically saying is that there are just momentum investors. That's where all the money is in. They're just momentum investors. And that's essentially what I do is I follow the big money. Now, I don't follow it. I actually look for what will very likely trigger the big money to buy something. And then we only buy it if they buy it. And that's kind of the secret to that. And I'll explain that to you in more detail on Saturday, 10 a.m. New York time. But it's very, very simple. I don't need to watch stock charts for it. I don't need to do anything Monday to Friday for it, by the way. I just do this all on a Sunday. So we just set up our trades or our buys or investments, it's all the same thing, in a smart way that's very, very simple. And that way we put our money where Wall Street puts their money, right? Now, I did promise you the full list of their stocks, and I'm not going to hold you hostage, so I'm going to give that to you here. Here it is. Can you read that? Okay, let me zoom in on that for you. That is as far. Oh no, we can zoom in a bit more. Take screenshots. That's what I'd recommend. But quite a few of the names here that are on our list, like Robinhood and SoFi, Roblox, GE, Spotify. I remember having quite a lot of these on our buy list too. MSTR, and then I'm scrolling down a little bit here. There's a screenshot number 2 for you guys, if you haven't already. D-Wave, we talked about that yesterday. Archer, we're in. Intuitive, for example. Ava here, that's one of our big winners over the last couple of weeks. I'm going to scroll down again for screenshot number 2. There's Ava, so that's a 3 even. So you can kind of see them, and they are basically in order of how heavily they are invested in these guys, right? And it also gives you in the middle the sectors. And I'm not telling you to run out and buy them. This is not my list. This is Goldman Sachs' list. So do with it as you wish. Use it as the basis of your research. But I just want to illustrate to you that these guys follow a system. And I'm going to give you the last screenshot. Here, this will be the last screenshot, which isn't, oh, this is the stock that everyone's talking about. It's just, no, it's a very, very structured, very simple rule-based thing. And they keep following the same principle we all do. And in my humble opinion, that's why we make money. So it removes the worries, it removes the research, it removes our staring at charts or balance sheets and all of that, because it's all a bit complicated, isn't it? So it's very, very, very simple. Is that useful for you guys? Is that useful? If it is, put a U in the chat, and here is Albert's bottom. One of you saying you think Ava what did you say? It sure imploded yesterday, busted yesterday, says Brent. How much was it down yesterday? 24%. So if you bought it when we called it with our rules, you would now only be up 256%. Oh no! Oh my God! You're only 256% up. And yeah, that would have been terrible, wouldn't it? Real failure. So yeah, really terrible stock pick there, that one, Eva. Our system does not work. We're only up 256% now on this one. It's absolutely, total disaster. So there we go. Now, pre-market looks a little mixed, a little concerned. And I think the jobs data is having a bit of an impact there. People are starting to think, and this is always this weird mind bend of Wall Street. They wake up and they go, oh, jobs data is bad. The economy is slowing. Recession fears. Oh my God. Right? And then what happens next? Well, what happens next is that then I'm thinking, hang on, recession fears. Rate cuts. Yay. Let's buy the really risky stocks, right? And it's just sort of this kind of yo-yo thing. But again, it's predictable. You know how it works. You know how the cycle works. And therefore, you basically can predict it and you can set yourself up accordingly. Where did Winston go? Winston, come on back here. Hey, come. Winston, come. Naughty cats and dogs are everywhere where I am. And there he is. There he is. That's better, Winston. Thank you very much. Where is he positioning in himself? We shall see if we can get an eye on him. I'd like to keep an eye on this guy. You never know what he's up to. There he is with Albert. Up to no good, undoubtedly. And then you can see the back end of my chair too. There he is. So does that make some sense to you guys? Is that helpful? Does that sort of help you understand a little bit like what Wall Street's actually up to? I hope it's giving you a little bit of an insight into something you don't normally get an insight into. And I hope you got screenshots of that. If you didn't, you can obviously go back in the replay and watch that again. But those two are friends, aren't they? Cats and dogs can't get along. Well, Albert and Winston certainly can. They actually really like each other. Albert likes to play with them. Winston also plays with the kittens. He literally plays with the kittens, and they seem to really enjoy it. We've got one kitten that looks exactly like Albert, just a mini version, girl, and they like really play with each other, which is very sweet. So he obeys. He's hungry. He always pretends to be hungry. He will look at you and say, "They never feed me. I haven't had a meal in 6 years." And you're like, "Dude, you ate like 45 minutes ago." But he actually has lost a bit of weight. He had a bit of a upset stomach. But today he is 100% happy and healthy again, which is good. Need to move your rug over a tad bit. Yes. Well, actually, he likes the floor because it's cooler. That's why. It's a subtropical climate here. It's like Miami kind of thing. It's hot. It's steamy. It's sticky. How do you use these spreadsheets? Says Anne. Well, Anne, to me, the spreadsheet is ultimately an illustration of what they're doing. So it's an insight. It's cool. For me, what's better is that I look at the sectors they're in, the stocks they're in, and I'm like, I'm in the same stocks, and I didn't know this was your list. So therefore, it is to me it just reaffirms that our system is set up right. Right, that's basically what that says to me. So that's really all I need to know. I just need to know that we're on the right track, and I know we're on the right track because I see the numbers. But it's always good, people don't often believe what the heck's going on here. And I'm just going to reposition this Winston camera here. Where is he? There he is. There he is. Oh dear, that's useful, isn't it? Cat rubs himself against the camera. Multi-cat. Bad cat. Very bad cat, this. So this is a mad show, by the way. If it's the first time you're tuning in, there will always be more cats and dogs here than you really wanted them to be there. But this is Albert, who's new around here, and he's very naughty and lovely. Let's wrestle Winston, indeed. Now, our dog does the same. He looks so abused. I know he does, doesn't he? He looks like he's had a really, really, really tough day. That one there, and I'm actually just looking for a third nanny for him. So he has a bit more hikes with other people when I'm a bit busy. The dog is outnumbered. Oh yes, absolutely, like 9-1 or something. So all right, my friends, any confirmation bias? Yes, that obviously also helps. But no, it's just, it's good to see, and I think perhaps for you to see also, like, I'm obviously a bit mad. You're like, okay, this guy might be a bit mad, but maybe there is actually something to that. Maybe there is actually something to that system that he keeps banging on about, because he keeps finding winners. He seems to be in the right stocks all the freaking time. And he seems to be in the same positions that Goldman Sachs is in, and those guys make some serious money. So if that is some incentive for you to perhaps come and join us on Saturday, felixprehn.org/seminar. The link is down below in the description. Then do, and come and learn. And I literally had a chat with one of our newer students today, he was WhatsApping me, and he was just saying, look, the so far, like for him, he's just like, I got all of my bags out of the way. Everything is risk management set up now. And he said, it's just the emotional toll that the roller coaster of the market takes on people. He's just like, I've just got rid of that. And he just feels so very good about that. So there are so many wins that we can have. And I just hope to encourage you to learn, at the very least, risk management, because that is ultimately what's going to make you very happy and relaxed and, as mad as a hatter as me. Now, someone had 11 cats. I think we've got 10? 9, I think. I think we've got 9 at the moment. I say at the moment, let's hope it stays at that day. So hit the buttons, folks. Like. Winston says, bye. Indeed. What do you think of ATT? We can definitely have a look at some of those. James wants me to lose the cat and dogs. I'm sorry, James. I think that's fairly unlikely to happen. So you might have to find yourself another channel, which is also entirely fine. I won't hold it against you. If the lunacy around here is a bit much for you, that is completely cool with me. I don't try to please everybody. I never have. I don't think it really works. And I'm in a very lucky place in life where I don't need to please people. I just am very fortunate that for some reason, we seem to attract a lot of very lovely, nice people who actually want to learn and improve their lives. And then you come to us with an open heart and the right attitude, and you learn and improve, and you have a tremendous time. And at the same time, you don't mind the rabble that's running around here. Financial needs of cat videos. Yeah, that's probably a good idea, isn't it? We should probably do more of that. A lot more of that, you see. You need to get another dog, says Michelle. Yeah, Winston's been lobbying for that for a while. Look how sad and lonely he looks to make friends with the cats. It's very tragic around here. All right, my friends, let's look at the pre-market here, where we have 10 minutes. Tesla, I think, is probably one of the more interesting stocks of the day. That, after gapping down and breaking through the 50-day moving average line, seems to be back at the 50-day moving average line. And if you ask me why, all you got to do is go on X. I have an X account, by the way. If you follow me on stuff, make sure it's the right account. It's generally a verified account with a tick. There are literally like dozens of fake accounts popping up every day. We can report them every day, but obviously platforms don't give a hoot. And then, if you just type in Elon, see what good old Elon has just tweeted in the last few minutes. And okay, Starlink in Sri Lanka, blah, blah, blah. Here we go. This is literally why Tesla stock is up, in my humble opinion. Elon writes, credit where credit is due. Real Donald Trump has successfully resolved several serious conflicts around the world. His stock goes up 5.3% pre-market. Is this a mad world? This is a mad world. I'd say it's a pretty mad world. Mark, using a 6% stop or the 50-day moving average line. For the 6%, you just want to be, if you're in a stock like Tesla that moves 5 or 6% in a day, 8% in a day, you're going to get stopped out a lot, right? If you're in stocks like Evo that move 25% in a day, again, a 6% stop loss isn't going to get you very far. So you do need to be a bit smart about that and see how that applies to what you're investing in, right? So if you're in say, Apple or something like that, it's probably okay. That thing tends to move mostly 2% in a day. Okay, here is an outlier, obviously, but mostly it's relatively modest move. I love how much it's just derailed into a pet show. I know. It's a mad world around here. Christian, that's very kind of you to say. I appreciate that. Cheesecake. Oh yeah, I honestly used to think that was a joke, and then I realized cake was actually a thing. And still a thing of beauty, isn't it? Still a thing of beauty. Where was the ideal entry point? And people are going to say, "Oh, he's doing that in hindsight." Well, watch the masterclass and you understand why I'm drawing these squiggly lines. That one, this one here for sure. That was a pretty good one too. Yeah, so I'd say those were basically your two entry points. So it was here, in fairness there, because the gap up you wouldn't have seen, and then it would have been here. And both would make you quite a bit of money. So this would have you up, are we allowed to? This would have you up 22%, which is, not bad for a cheesecake stock. And this would have you up about 11%. So there's always a second chance also to enter in. And when you're on a good run, we might double down on it. Now, I'm not seeing much volume down here. That's one thing I don't like. There isn't really a lot of volume down there, so I'd be a little cautious with that. But it looks good this morning for sure. But they sorted the watch list alerts thing yesterday within minutes. Thanks very much for that. And yeah, we have a very, very focused, very hardworking team who really, you have no idea how complex it is to build something like this. One of the main reasons is options data, just because there is just billions of points of data. But yeah, it is quite weirdly challenging to build something like this that works 100% of the time. But we're doing our best, and I think it's a great product. One of the things I'm absolutely loving right now is the heat maps. So for example, I just put a video out today on. Actually, I did a video yesterday on semiconductor stocks. So I imported like the 90 or so semiconductor stocks that are into a watch list. And I can get a heat map now. You could obviously do this for your portfolio too, right? And then you just see exactly what happened. Well, this is from yesterday, pre-markets coming shortly. But I can also get a bit of a visual count of like how much of the sector is green and how much is red. You know what I mean? Like as a kind of visual count. So yeah, the big boys are down, but actually the rest of it is actually looking pretty decent. So I find that very, very useful. So I might make watch lists here for all the major sectors or whatever ideas I have. There's a video coming out later today on these stocks, for example. This was yesterday, right? So again, you can kind of visualize that, but you could put your portfolio into it. So any watch list you create in TradeVision now, you can turn into automatically into a heat map, which I think is super, super cool. So you can play with that. Literally, there's a free trial. Play with it for a whole week. If on day 7 you hated the thing, you cancel it. You don't pay a dime. If you like it, you stick around. FelixRuns.org/TradeVision. There's a link down below for it. I'll put it in the chat for you as well. And just super useful. Or you have a lot of ideas, a lot of things you want to track. You just visually, you're like, this is what happened today, right? This is cool. Nikolas says, I can't believe TradeVision is getting better and better. Can't believe you only charge so little for something so valuable. And yeah, I keep looking at tools out there and I'm like, oh, actually, they have this one little idea. Let's have a look at that. And I'm like, they charge $68 a month. Are they crazy? We charge like $19. If you subscribe for the year, it's $16 a month. And it's because the mission is genuinely to make good data and information available to everybody to level the playing field. Because without it, people are blind. If you don't know what you're looking at, you don't know what you're looking at. So, or the journaling tool, for all your positions, the journaling tool, that's a total lifesaver if you actually want to learn. Lots of chat activity, few likes. That is true. Yes. City. Yeah, we were just bullish on the whole banking sector, weren't we, Winston? I think Winston said yes, banking is good. Bank of America was on that, Citibank was on that, and sorry, Citigroup it is now, right? Citibank is what went bust, isn't it? And again, if you understand the simple rules that Wall Street looks at, well, you would look at this, right? And you would have seen an entry point here, as they say in France, and ear, right? And you'd be up and you'd be happy. You could even have possibly entered a little sooner if you're a bit more of a sort of aggressive trader. But yeah, there is money to be made in banks. There has been for some weeks, and we've been in it for some weeks, which is cool. Heat scale adjust. My holding show half the screen is NVIDIA. Yeah, and then that's because it's at the moment it's done by market cap. We're aware of that. We're looking to adjust that. So we got rid of the sectors just, which I think was a good move. I guess the next thing is, yeah, like how do you deal with, you know, the big stocks like that? We probably have an option up there that would be sorted by other, you know, not just maybe by position move rather than by market cap, because yeah, like out of my, you can't really see that because I'm blocking it. I move myself in the corner here. You see my all my semiconductor stocks, all the little ones, right? They're all down here and they're really little. So yeah, I think there is a good argument to have an extra option up there to be able to flip from, you know, market cap makes sense when you're looking at, say, the S&P. I think that makes a lot of sense. But when you're looking at something different, then it probably makes sense to be able to switch around to something else. So yeah, we'll appreciate the feedback and we'll do something with that. Now, Bank of America also starting to pop. Absolument. Yeah, that was also one of our buys, and that's popping very nicely here. That was our last buy at 45. We're now at 48. Quite happy about that. I can remove NVIDIA from the heat map list. Yeah, that's maybe a short-term fix, but we'll come up with a better solution for that. Appreciate the feedback. Size by PE. PE is probably the most useless piece of information, so I don't really want to encourage people to look at PE. It's honestly just entirely useless. People tend to sell the high PE stocks and they buy the low PE stocks. Low PE stocks are low PE stocks because the businesses suck. And high PE stocks usually are about to, you know, cure cancer or something like that. So generally speaking, you want to probably avoid the highest PE, and you definitely want to avoid the lowest PE, and you want to be on the higher side of PE, but just not the highest level of PE, because that tends to be a bubble, at least if you're holding things for the long term. Log cap, that's an interesting idea, but few people will understand it. I think that's also always something to bear in mind when you build something. Make it available for the 99%, not just the 1% of maths whizzes. And I'm not a maths whiz in any way, shape, or form. Stephanie, you're putting in some expensive upgrades pre-retirement. That sounds good. What are you doing? You're going off grid or something? I'm actually planning on doing that. I'm planning to get completely full-scale loon. Bell time. Oh, yeah. Thanks for the reminder. The goal is to be 100% self-sufficient, which I think is going to be tremendously fun. So not need anybody for anything. Wouldn't that be good? Okay, let me see. The market is about to open. If you are noise sensitive, I'd recommend that you avert your ears, because this is going to get noisy. If you're wearing ear thingies, it's going to get noisy. Take them out, right? There we go. That was for American friends who need to be told that coffee can be hot, can burn you. Yes, there we go. The markets are open. That was fun, wasn't it? I hope you could hear that. If you couldn't hear that, I should have to go and shoot myself. So there we are. And Winston completely chilled about the whole thing. He's like, yeah, he makes that racket every night. The market is oficialmente open, which is brillante. And let me see. Let me just refresh. I know you can't see it, but let me just refresh my screen. And as I'm seeing this, can you see that? You can, right? Tesla seems to be up 2.6%. Let's have a look at that. So you can right-click on any of these and click show and chart. It's now up 3.4% even, which is good. So the watch list at the moment updates every 30 seconds, which should be plenty. We'll make it live, but we just need to fix a few things there, because it can potentially overwhelm stuff. But there it is. You see, Tesla now 3.8% up. So it actually does it automatically, which I think is very, very, very cool. So Apple, Nvidia basically flat, but okay. Tesla up 3.8% because Elon is putting out some white smoke signals of alleged peace before he loses it again. Palantir is up 1.6%, which will please the Palantards. Edwin, I appreciate you taking that with a sense of humor. Yeah, I always find it amusing just what level of health warnings are required for Americans. And it's not because you guys are stupid. It's because your lawyers run the country and they will sue somebody for anything. It's absolutely ridiculous. This plastic bag, if you eat it in its entirety, is likely to kill you. Yeah, I mean, maybe it should. I mean, maybe that's Darwinism, isn't it? Natural selection. Maybe we should have less warnings, signals out there. Please talk Tesla. Please talk dirty to me about Tesla. Well, okay. Let's just assess this sort of independently. And I have no position whatsoever in Tesla. Yesterday, we had this gap down, right? Gap downs are bad. Lots of people, lots of scanners, lots of algorithms scan for gap downs. It's a big bearish signal. Nobody likes it. Today, we get this little green gap down. But it's disappointing. Why? Because pre-market, we were actually higher. And you see that yellow line there on my screen. And my drawing abilities is a little limited because my cat stole my pen. Just have to find it. I honestly don't know what they did with it. Scoured around the house. Bastards. That is the 50-day moving average line. And you can toggle that on in Trade Vision here, which is what I'm using. There's a link down below to it. And generally speaking, you're below the 50-day moving average line. Basically, no institutional money, no trader really wants to buy it. It's just the way it is. We're also below that purple line there, which is the 150-day moving average line. Generally speaking, no investor wants to be in it below that. So we basically have a bunch of sort of strikes against it. So I'm not liking it. I'm not liking this setup. And this bill is going to pass undoubtedly. And I think Elon's going to lose it. I think Elon's going to start funding all the people who are pro-cutting spending, and obviously the president isn't going to like it. Democrats aren't going to like it. I'm not quite sure who's going to like it. Well, obviously some voters will like it. I understand. If you have a responsible, flair, then yeah, it makes a lot of sense to kind of balance a budget. But honestly, let me ask you this. Most people, right? If I say to you, you have a choice. Either now, you could either have $100,000 reduction in the deficit, or I give you, hypothetically, $100,000 right now in cash. You choose. You put the good of the country first, or would you rather have $100,000, right? And 99.9% of people would choose the $100,000 cash. And that's what politicians have figured out. So they either give you tax cuts or they give you handouts, right? Stimulus funds, this check, that support, this, whatever. And so they're basically buying your vote. And it's cheap, it's unpleasant, it's immoral, it's short-termist, it makes not at all sense. It's irresponsible and corrupt, perhaps. But given the choice, $100,000 less debt, and you're thinking, well, it's 37 trillion. Is $100,000 going to make any difference? $100,000 is going to make some difference to me and my life and my family, right? So most rational human beings will choose the money. And that's basically what happened to politics around the world. It's not just an American problem. It's just it's ultimately a democracy problem, right? So give me the money. Can I have both, please? No, you can't have both. That doesn't work. Doesn't work. It's you want a lower deficit, you gotta accept some pain, right? And then people are like, yeah, the idea was nice, but I'm not so much a fan of the pain part. So what are we looking at here? Well, you're basically looking at a big, beautiful, shiny, bouncy breakout. So the buy point was basically there, and the volume kicked in actually the day before. you could have argued that maybe that was the buy point too, if you were a bit more a trader. So yeah, it looks good, doesn't it? Looks very good. I prefer bullion. Yeah, I can understand that. Edward, you care about my country. I can make money with someone giving it to me. And that's marvelous, Edward, but it puts you in the very distinct minority, right? Otherwise, you would not have the politicians that you have, right? So in a sense, we get the politicians we deserve, unfortunately. Pepsi. Actually, a lot of you guys were talking about Pepsi yesterday. What's going on with Pepsi now? Ha, 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 ha. I see what's going on there with Pepsi. So what do you see? Well, you see a sideways consolidation in the textbook manner. You then see a beautiful breakout above that. I was going to say green line, but it's still blue, isn't it? Let's make it green. That green line, and volume spiking up. You're above the 50-day moving average line. This is a very early setup. So I would argue you'd have to be a real trader to get in on this, because an investor typically doesn't want to go in that early, because the likelihood this will fail is still fairly high. Because look up in the sky, and is it a bird? Is it a plane? It's a failed breakout, right? Failed breakout, failed breakout, failed breakout. So it's not the first time we've done this. Till we cross that purple line there, the 150-day moving average line, it is very, very high risk. The 50-day moving average line is also still jumping off a cliff, which is also very high risk. So I'm not saying do or don't do this. I'm just saying it's a high risk setup, potentially a high reward, but at the moment it's a high risk setup. Now, Pepsi is a great company in my opinion, but still, it is what it is. $100K of Vegemite. You're a peculiar individual, Stephen. You like Vegemite, really? Are you Australian? Is that the problem? I worked for an Australian bank, actually, great people. So Ricky, you made a heat map of all your stocks and Trade Vision. No, at the moment they're still sorted by market cap, basically. So if you make your own list, say these ones here, it'll make the little ones very small. I will suggest an improvement to that, because I think it would be good to be able to make them maybe just equal size. I think that could be useful for people. Or maybe we could sort them by percentage increase or something. I don't know. And maybe we just make them equal size as an option. Because if it's your portfolio, you don't really, well, if it's your portfolio and we have the data from the trade tracker, our journaling tool in Trade Vision, then my suggestion is for that, and that'll hopefully come soon. It'll be done by the size of your position, which I think would be rather useful. But we should probably have an equal weight kind of options here to be able to do that, because it can get a little silly, I think. Say you look at my robotics stocks and the whole list is just Amazon, right? So yeah, but it's I think it's very useful. I'm absolutely loving it. Like, for example, here, Winston's gold stocks. There's some more, aren't there? I thought there was some more in that. But yeah, we'll improve that. And I'm a big fan of putting out, and this is all in Trade Vision, putting out new features quite early and then getting the feedback from you guys, and then we'll improve it incrementally over the next couple of days and weeks. And that way we actually end up with something that's really, really good. So we're a little bit of that mindset, just push stuff out. Let's just get it out there. And then let's break it, and then let's make it better. And I hope that's okay with you. I'm falling in love with Albert. Albert is very sweet, but then look at this. Look at this. Look at the face. Look at the cheeks. Look at the paws. He's a special little hound, isn't he? But Albert's also pretty cool. So there we are. Now, if you want actually something useful and you actually want to improve yourself, so 3,500 people here live, I'm not going to ask you to hit the like button or any of that nonsense. Scan that QR code on the screen at the bottom there and join me on Saturday for a full, unadulterated hour and a half or so of learning how to do all your investment all your trade decisions on Sunday, and at the same time, how to spot those big, beautiful breakouts that Wall Street keeps buying. And it's surprisingly simple. It's really surprisingly simple. And you don't need to do anything during the week at all, ever. So come and join me there, felixprehn.org/seminar. James, take a walk. What is James saying? I like people who have a bit of a go at us. Coca-Cola looks better. Okay, that was pretty mild. I was thinking somebody was really going off on one here. I don't understand what options are and how to buy them. Well, don't buy them. In that case, that would be my first piece of advice. You can learn it if you like. It takes a little bit longer. I would start with understand how these patterns break out. Understands what makes a breakout. Understands why we want to buy Bank of America at that point and not before and not after. And once you really get into that and you're starting to make consistent money with that, and you just do that by spending 2 hours on a Sunday, and then you're still like, I'm loving this investing thing so much, I want to really get into options, then talk to us about options. But you got to get the basics done first. And the basics is actually all that you really need. It's all that you really need. So check that out. What percentage of your trades are stocks versus options? Varies wildly. Right now, it's mostly stocks. Like since the beginning of the year, it's mostly stocks because the market's been so erratic since Trump. High VIX, I tend to be more in stocks. I had a safer position that closed yesterday. That was an options position, for example, but that closed yesterday on that bit of a pullback there. I think I have an options position open on MSTR. But not that many at the moment, but it varies. There will be times where I'm doing a lot of options because it's just so brilliant, but at the moment, I don't really see it. Chris, appreciate that. That's really what it's all about. Wally, I've had trade vision since April 1st. I love it. Brilliant. I'm glad, my friend. We'll keep making it better and better and better and better. Are options difficult to learn, says Marks? I wouldn't say difficult. I also wouldn't say it's easy, but it does take some time commitment. Whereas just investing based on the basic rules that we have, very simple, takes very little time. But options just takes a bit more commitment, for sure. So I'm not saying it's not worth it. I'm just saying there is a higher threshold there to achieve. Can we see Winston? I lost my golden yesterday. Oh, Carl, oh my God, that's terrible. I'm very, very sorry for you, my friend. That's very sad. There he is, lovely little souls that they are. And that's one of the things, isn't it, with pets, that they're not with you forever, unfortunately. I'm fairly spiritual. I do actually talk to we have a cat. We lost a cat last September 11th. I talk to her every day. I say good morning to her. I say good night to her. And that might sound a bit kooky, but I think it's a nice thing to think that the spirit is still with you and they sort of stay with you if that's what you want. But yeah, there are big, beautiful bundles of joy. So we just have to treasure them every single day. One of our students today actually messaged us, and he lost his wife today. And that really puts things into perspective, doesn't it? You're just like, bloody hell. So cherish every day. Work towards every day being brilliant. And in my humble opinion, for that, you need to be in control of your time. To be in control of your time, you need money. Money is the thing that makes the world go round. It gives you freedom. And you can then spend your days with the people you love, the creatures you love, and doing what you love. And life isn't always necessarily as long as we like it to be. I'm still planning on 130, by the way, so there'll be plenty of compounding and plenty of YouTube videos to come. And I was like, no, this guy will never go offline. But yeah, treasure every day. I think that's really a really, really big lesson there. So thanks for tuning in, my friends. And I wish you and Winston wish you a beautiful day. Come and join us on Saturday, felixprehn.org/webinar, 10 a.m. New York time. That should allow even the wage slaves amongst you to tune in and learn how we do all of our trading on Sundays, how we find these breakouts again and again and again and again, always using the same system, the same rules. I'll teach them to you. And I wish you a beautiful rest of your day.